Good morning, everybody. I'm going to go ahead and share my screen with you, and we are going to get into all things benefits and ACA. So, like Kevin said, I'm Caroline Kobasa. I'm a member of our Richmond benefits team, and today we're just going to go over some things with ACA and anything compliance-wise that may have changed throughout the year. So first off, we're going to talk about what's new with ACA, what deadlines you need to be aware of, how you can audit to avoid unnecessary stress, and also what happens when you receive a dreaded penalty letter from the IRS. Lastly, I'll go over some future predictions just to talk about where ACA is headed. So first, I want to get into some basics. I know a lot of you are using our ACA service, but for those of you who are not sure if you need to file or if you're using another service, that's totally fine. For anyone who's not sure whether they need to file or not, I just want to do a quick recap of what the requirements are. So the prior calendar tax year, so 2019, is used to determine if you are an applicable large employer or an ALE. So the IRS requires an applicable large employer or a company with over 50 full-time equivalent employees to offer affordable coverage. There has to be some tracking and reporting with this because if the coverage was not affordable, then the employer is subject to employer shared responsibility penalties. So this can get tricky because a number of our clients have multiple entities. So in this case, each entity is not treated separately if there's a common ownership. So what that means is those two companies or those multiple companies need to be aggregated together for those counts. And we can help to assist you with determining your full employee count just so that you have a better idea of whether you're required to file or not. Now, the calculation to determine who is full-time is essentially what the IRS is saying, anybody who works over 30 hours in a week if you're a part-time employee should be offered coverage. So it really all comes down to how many hours they work and not how you classify them. So you are allowed a measurement period, which is typically an annual period. And what that does is it takes the average hours over that period to determine if a part-time employee is in fact considered full-time and if they should be offered coverage or not. So iSolved, our system actually has a built-in report to help you identify those people. And for those of you who are not using our service, like I said, we can help you to determine whether or not you do need to file. Now, for those of you who are not familiar with the filing requirements, there is a company level 1094 form, which is submitted to the IRS with each company's summary information. And then there's the employee level 1095 form, which shows specific employee information regarding their health insurance coverage throughout the year. And if you offer self-insured or self-funded insurance coverage, you essentially, as the employer, are acting as the insurance company. Now, insurance companies have to report on who's covered. So for self-insured companies with less than 50 employees, you actually have to file a different form, and that is the 1094B and the 1095B instead of the C. If you're not self-funded, you'll be filing the 1094 and 1095C. Now, we have a lot of clients with very different funding arrangements. What we do is code the system if it's a self-insured plan. There's a lot of different terminologies that are used by the insurance companies, such as level funded, self-insured. So it's always a good idea to just check with us to make sure that we have the system coded properly for you. So I want to move on and talk about what's new for 2020. Now, there was a new notice that was released called Notice 2020-76, and relief has been given in previous years called good faith relief. This provides that employers that report incomplete or incorrect information on their information returns, such as a missing tax ID number, can show that they made a good effort to file and furnish. The 2020 reporting year is actually going to be the final year that this type of relief is available. And Notice 2020-76 conveys this very clearly by stating, as this good faith relief was intended to be transitional relief, this is the last year that the Treasury Department and the IRS intend to provide this relief. Now, the 1095 form for tax year 2020 will not really be changing very much aside from the addition of a new section, which is line 17. Now, this line is where you would place a number of new codes that were actually released, and that's codes 1L through 1S. These codes are really only used if you offer an HRA to your employees. So if you don't, then you don't need to worry about it. But if you do, then just keep in mind that there is an additional line that will need to be filled out. Moving on to my favorite section, deadlines. So for anybody who is not currently using our services for ACA reporting, we ask that you notify us by December 1st, just to let us know if you want us to start managing that for you. That's going to give us enough time to set the system up for you, make sure we have all of your enrollments for the previous year. And then for any existing clients who are using our services, we ask that you have your forms approved by February 2nd. We'll be generating forms and continue to do scans up until the period right before the IRS due date. So just please go in and approve your forms by the 2nd. The electronic filing date is March 31st. So in the event that you find any errors, you can always notify us and we can make a correction just so that you can provide your employees with an updated form. Now, typically each year, this is where I try to make an insurance joke. It's never funny, but I know everybody's had a really rough year, so I'll spare you from that today, and we will just move right on. That being said, it has been a very hard year. I know everybody's even more anxious about ACA than usual, with all of the terminations, inactive employees, and overall confusion about how changing your regular way of doing business would affect your ACA. I'm here to give you a little bit of peace of mind. I always stress to everybody about the importance of early form approval every single year, but this year is actually going to be a lot more important to get that done early. For anyone who was furloughed during 2020, please triple check their forms. If you allowed them to continue their insurance coverage, you want to make sure that the code showing up on their form is proving that they were enrolled. If you did not continue their insurance coverage for the time that they were not actively employed, then you also want to make sure that the form reflects this. So please call us with any questions. We're happy to help you look at your forms and show you exactly how to do any manual overrides in the event that one of those codes is not correct. There's also been some changes due to COVID. Now, on November 2nd, 2020, the IRS announced some of these changes. Most of them that are ACA related just involve a change to their collection procedures to assist the struggling taxpayers that have been impacted by COVID-19. So some of these changes include just an extension on the number of days that taxpayers have to resolve their tax liabilities. This was previously 120 days, and it's now 180 days for those that qualify. They're also offering some flexibility for some taxpayers who are temporarily unable to meet the payment terms of an accepted offer in compromise. And one other one that I'll highlight is just for any qualifying taxpayers who only owe for the 2019 year and who owe less than $250,000, they're allowing you to set up an installment agreement without federal notice of a tax lien filed by the IRS. So while you can't start approving your forms until after January 1st, there are a lot of steps that you can take ahead of time to help you prepare for error-free forms. The last thing any of us want is for someone to be charged a penalty due to bad data on their forms. So you really want to be looking for any errors that could be caused by incorrect data. Please keep in mind that forms need to be printed, shipped, and hand-delivered or postmarked by the due date. So it is a very short window, even with the extension this year. But since all of you, after this presentation, will be going into iSolved and looking at your forms from January through October, when January comes and you just need to review November and December, it really should not take you very long. So first, I would always recommend that you'll pull the ACA preview report. Now, the system will show any errors such as a missing address or incorrectly formatted data on this report. We want to make sure that you do not approve your forms until after this report is error-free. Test employees will also show up on this report, so if any of them are listed, please make sure you terminate them or let us know so that we can get them out of there and they don't get a form submitted to the IRS. So step one, I would always recommend that you check all of your employment statuses and categories. All full-time employees will receive a form automatically, but just make sure that anybody in the system is coded in the correct full-time or part-time employment category. Next, you want to make sure that all your enrollment data is in the system. So it's fully automated to generate the forms by looking at the benefit enrollment data. But if your plans start mid-calendar year, you just want to make sure that you're accounting for any enrollments that happened in the first half of the year as well as the second half of the year. And as the admin user, you can go in at any time and update this information. Third, I would always recommend that you verify hire and rehire dates. So if you have a terminated employee in the system who's still showing as active, then that employee goes out to the exchange, takes the premium tax credit, but is no longer an employee anymore, and you're still showing them as one, you will incur a penalty. So just make sure that anyone who is terminated is listed as terminated. Anyone who is active or rehired has that date in the system. And then for self-insured companies, like I mentioned before, you will have a slightly different form to fill out. Your form will include a Part 3 on the 1095, and this is for covered individuals. So you need to make sure that within iSolved, you update the employee contacts to show any dependents and that they're attached to those enrollments, which will allow you to have a complete form because dependents are actually listed on there. So you've gone in, you've audited all your information, you've previewed your forms, and you're ready to go. What's next? The key date to approve these forms, like I said, is February 2nd. So please do not forget this step. We will be tracking you down if you don't approve them. As many of you know, the ACA process is not a very riveting experience, but I will tell you that the level of excitement that we get here on the benefits team when somebody pushes the approve forms button makes this whole season worthwhile. It will date stamp and every time you do that and time stamp it so that you can track who went in and approved those forms for you. Now, one question we always get is, what if I find an error after I approve my forms? It's not a problem. Just shoot us an email, give us a call. We can unapprove them for you. It's not like once you hit approve, we're immediately printing the forms or submitting them to the IRS. So there is a little bit of wiggle room if you make a mistake. That being said, some common mistakes or questions that we get, I'll go over just a few of the most common ones. One of them is if line 16 is blank for just one single month. What this really is telling you is that most likely the benefit plan for this employee did not start on the first of the month or did not end on the last of the month. Another one we always get is that a known full-time employee is not generating a form. If this happens, I would just always recommend that you go check the employment status of the employee and make sure that they're active and listed as full-time. Next, code 1E is showing on line 14, but there's no code on line 16. What you're saying with this statement is that you offered minimum essential coverage and minimum value coverage, but it was not affordable to that employee. So what I would ask in that case is that you check to confirm that the lowest cost plan for the employee-only coverage is truly affordable by using the federal poverty level or one of the other two safe harbors that are available to you. And then another one that I'll just go over is that we get a lot is line 15 having a number on it. This only populates on a form if the lowest cost monthly amount offered is above a certain percentage of the federal poverty line. This federal poverty line is established by the IRS. The percentage and the actual federal poverty line amount changes year to year, so just make sure you're keeping up to date on what that amount is. Like I mentioned earlier, COVID-19 may have caused some form errors for inactive employees. If you have an employee who was inactive during any point in the year, please double check their forms. Depending on how you handled their enrollments when they were inactive, iSolved may pull the incorrect codes. So just please make sure that you go in the system, take a look at anybody that you know was inactive, and just verify that their codes are correct. Next, we will get into penalties, which I hope none of you have, but the IRS will inform any employer of an ACA penalty using the letter 226J. Now, this letter includes all of the details about what penalties you are responsible for paying. It also includes a Form 14765, which outlines the months that employees received tax credits. Now, you might be wondering what would trigger a letter 226J. And really, it's just failure to successfully appeal or electing to not appeal an exchange notice that might result in you receiving one of these letters. There's two types of employer penalties. There's a type A penalty, which is basically saying that the applicable large employer did not offer minimum essential coverage to at least 95 of its full-time employees. And then there's a B penalty, which is saying that the applicable large employer did offer minimum essential coverage to at least 95% of its full-time employees, but one full-time employee may have been allowed the premium tax credit because the coverage was either not affordable, didn't provide minimum value coverage, or it was not actually offered to that specific full-time employee. Now, penalties add up very quickly. We've seen some crazy ones come in. That being said, you as an employer will have 30 days to respond with the Form 14764, which is the ESRP response form. I will point out, as your payroll service provider, we're unable to provide legal advice. So if you do get one of these letters and you don't believe that it's correct, I would urge you to talk to your legal or tax professional for guidance. We're happy to help you, but we can't offer any legal advice. Now, this year obviously brought many changes, and we often get asked every year if the ACA requirements are going to go away and if employers actually need to file anymore. Now, the answer to this is yes. In fact, Americans should anticipate a number of advancements to the Affordable Care Act under the new Biden administration. Some predictions by multiple sources include reinstating the federal individual mandate penalty. What this is, previously individuals faced a penalty if they did not have health insurance, and the only way to avoid this penalty was to either be enrolled in minimum essential coverage or to qualify for an exemption. Now, as of January 1st, 2019, this changed, and that tax penalty was eliminated. What that meant was that even without an exemption, you no longer would owe a federal tax penalty if you went without ACA qualifying minimal essential coverage. Now, the Trump administration made adjustments to the rules of these types of plans and essentially lessened the requirements for employers. However, a resulting problem from this was that it made it easier for organizations to offer less than comprehensive health insurance coverage to their employees, and it exempted certain employers from the ACA small group health insurance rules. There are some predictions that the Biden administration would roll back association health plan rules or even remove them to make employers offer more comprehensive coverage. One area of the ACA that will likely remain unchanged, regardless of any election results, COVID-19, or anything, is the employer shared responsibility provisions. This is commonly referred to as the employer mandate. So under the ACA employer mandate, applicable large employers, which are organizations with 50 or more full-time employees or full-time equivalents, are required to offer minimum essential coverage to at least 95% of their full-time workforce. Such coverage also needs to meet minimum value requirements and is affordable for the employee. Anyone in violation of this will be subject to the Internal Revenue Code Section 4980H penalties. So I know that was a lot of information, but some main takeaways from today, and if not the most important part of ACA this year that I would like to inform you of, would just mainly be our deadlines. Like I said, December 1st is when all new clients must notify us if they want us to handle their ACA reporting. February 2nd, please go in and approve your forms by then if you're using our service. March 2nd is when the clients will need to distribute their 1095 forms to their employees, and March 31st is when we will electronically file any of those 1094 and 5 forms with the IRS. Just make sure that you're going and reviewing any of the updated IRS instructions, verifying your employee data in iSolved, and also keep an eye out for any of our ACA users right now for an ACA Zendesk ticket. We're going to be sending one out shortly with updates and reminders for you. But if you still have any questions, either after this presentation or as the year goes on, please contact us. You can reach us at benefits@dominionpayroll.com. And that's all I've got.
Caroline, that was great. Thanks so much.
Thank you.
I don't know how you keep Form 4684 separate in your head from 395J, but that was impressive.
It's a gift.
It looks like we did have a couple questions come through the Q&A, and we'll just take a moment to dig into those. So Tammy asks, what determines if our partner companies are part of our ALE?
So the applicable large employer is determined, like I said, if you have common ownership of a company, there is a percentage for that requirement. So if you wanted to send us your information, we could tell you or help guide you with that. But basically, if you own 5 companies, for example, and they're completely unrelated, if one of them is a restaurant, one of them is a bowling alley, it doesn't matter. If you have common ownership of those companies, then those counts are going to be aggregated together just so that will count towards your full-time equivalent. So hopefully that helps, but we can help you determine if you are an ALE or not.
Perfect. All right, let's see. Susan asks, California is requiring ACA forms to be filed with the FTD. Will Dominion submit these forms on our behalf?
That's a great question. So I know that we do file with the IRS. We typically keep up to date on all the different states' requirements, but I will have to get back to you on that one. I'm not positive if we will be doing any additional filing for the state of California.
All right, Susan, we'll get back to you on that one. 2 questions that are related. Lynette and Jason have asked, Lynette says, if there's only one W-2 employee, they are covered under another plan, and we don't offer health insurance, do we still need to have an ACA form? And additionally, Jason asks, who is not required to file ACA filings?
Perfect. So an applicable large employer basically is determined by having 50 or more full-time equivalents. Now, what that means, it's not full-time employees. Like I said, it's not how you class them, it's how many hours they work on average. So if you have 10 full-time employees and 40 part-time employees, and all of your part-time employees are working about 30 hours or more on average, then you would be considered an applicable large employer. So you would meet that requirement. So if you only have one W-2 employee, then you do not need to file.
All right. Last one here, it says, is level funded treated as self-funded for purposes of ACA? Which forms do level funded employers with greater than 50 FTEs complete?
So yes, it is. Like I said, there's a lot of different terminology out there for self-funded or self-insured. Level funded does actually fall into that category. Basically, most of the companies that are level funded are either partially self-insured. So it really depends how you're coding the system. But if you are a self-insured or company, then you would be filing a different form that would include dependent information. So it looks exactly the same as the regular 1095 form, but the difference is there's a little line at the bottom where you would list your dependents, and those will need to be included in your enrollments in the system. So that's really the main difference. And you also, if you're a self-insured company, you have to file regardless of whether you have 50 full-time equivalents or not.
Perfect. Before we wrap up, I did see a couple questions about seeing some of the slides again, and I just want everybody in the audience to know that our comms team and our marketing department is going to be slicing and dicing all these presentations, and we'll make them available on our website. So you will be able to go back and see the full presentation, download the slides and see all that info. With that, Caroline, I think all that's left to say is thank you so much. Appreciate it.
Thank you.